Good evening, everybody. My name is Dr. Tommy Perkins, and I am one half of Medics Money. The other half of Medics Money is Dr. Ed Cantelo, who's also, well, he's a GP trainee, but for only one more week, because like some of you, I guess, he's CCTing next week. So he managed to squeeze in his exams before the pandemic kicked off, and he's CCTing next week. So Ed is running the chat. So I'm going to give everybody a bit of time to get in. There's 120 people here already, so we'll just let everybody filter in. But one thing that would really help us is if you headed over to the chat, which is just over there, and said hi to Ed so he doesn't get lonely, and also tell us whether you are a GP trainee, ST1, 2 or 3, or whether you are a first 5 or partner or locum or salaried. So head over to the chat. Hi, Andrew. I can see you're there already. Super quick with the keyboard. And Ed's there as well, which is always reassuring. So just going to jump on the chat for a bit, and then I'll introduce tonight's presenters. Hi, Elsa. Aid is a GP ST3. Everyone's saying hi to Ed. Elizabeth is a locum in Cheshire. Van is a locum. It's got some Liverpool, ST3s, first 5s. Great. This is super helpful because it's going to help us to, adjust the webinar to everybody. So ST3, someone's on mat leave and an ST3, but they've only got 3 months left. Those 3 months, they go slowly, but when you do CCT, it's worth it. So stick in there, and congrats for having the baby. Catherine is a GP locum. Okay, we've got 140 people in here already. So I'm just going to give another couple of minutes for the chat to... hi, Chris from Sussex. Manuar is a locum, 6 years CCT. Hi, Vera, locum. Katz, a salary GP, first 5. So this is the perfect audience because that's what we're going to cover tonight. So that's good. So I'm just going to give it another couple of minutes for everyone to get in, and then we will get going. And I'm going to jump in the chat and say hi to everyone as well. Great. Oh, Nathimi's getting SE3 next week as well, like Ed. So it's a super sweet feeling. I remember it well from more than 2 years ago now. Oh my goodness, I'm getting really old. But yeah, Catherine's just CCT'd and about to start a salaried post. Congrats. Great. All right. What I think we should do is introduce tonight's guests and get going. Yeah, so someone's saying we can't see Ed. Ed runs the chat. So I am the beautiful face that does the talking. Ed is the brains, and so he runs the chat. And I forgot to say, if you've got any questions, drop them in the chat. That's really important because we're going to try to answer those questions as we go through. And Ed collates the questions. So I'm like the brains. Ed's the brains. I'm the brawn. Think of it like that, basically. There you go. Ed's saying he's moderating in the chat. So yeah, he's there. Great. Okay. So yeah, when I was writing the promotional stuff for tonight's guest, I was going to put that we had Katy Perry coming to entertain us, maybe do a bit of singing. But actually, your name is not Katy, it's Kate Perry. And I'm sure you have never heard that joke before, right, Kate?
Not at all, never.
Sorry, but I had to make it. You know, it's too easy. Katy Perry.
I know.
You want to give yourself the full intro? We also have got Stuart. I don't have any jokes about Stuart's name. So, yeah. Do you guys want to introduce yourself and then we'll get going?
I can kick us off here. Thanks very much, Tommy. Yeah, so I'm Stuart Singer. I'm the most senior partner in terms of age, more than anything else. So I've been dealing with medical accounts for over 30 years now. RBP are probably the leading medical accountants in the UK. We have approximately 350 GP practices and over 2,000 GPs as clients. We do a lot of work with locums and trainee GPs, registrars. So we do quite a lot of courses, and we're very experienced in helping you guys with getting into finance, because one of the things that medical school doesn't do is give you any training in money, and then you're thrown in the deep end very, very quickly. So we're here for you. I'm also a member of the Chartered Institute of Taxation, so I've been a tax specialist for over 30 years as well. So that's an area that I do a lot of work on. And that's basically me. Thanks, Tony.
Awesome. And Kate Perry?
That's it, Kate Perry. No, I also have been a medical specialist for what is nearly coming up, not quite as long as Stuart. So Stuart does beat me by experience for nearly 30 years. I have been a partner before, and I do as a firm, we do quite a lot of write articles, and we run VTS schemes. So those of you may have seen either myself or Stuart, less so perhaps, in recent courses, if your VTS trainer invites an accountant along. So we do those. But obviously we're all locked in at the moment, locked down. So this is a good opportunity for those of you who haven't had such training to get some insight into what it means to be a GP locum, whether salaried, locum, both, either or, and hopefully we'll cover all those aspects for you tonight.
Perfect. Yeah, thanks for that, guys. So we're just letting the final few filter in at the back of the lecture theatre. There's always a few latecomers sitting on the back row. So I thought we should just whip through briefly what we're going to cover today, because we're going to try to teach you what GP training didn't about managing your money, which is quite a lot. But we're going to talk about expenses, what you can claim, what you can't claim, a bit about mileage, a bit about how you pay tax. You know, if you're self-employed, when do you need to pay tax? How much do you need to keep back for tax? Payments on account. We're going to talk a bit about self-employment versus limited company, which is like the #1 question that we always get asked by you guys. Should I start a limited company to save tax? And IR35 as well. And we're going to go through the pension as well. But we're doing this for you guys, to help you guys. So if you've got any questions, drop them in the comments. And we've already got some that people emailed us in, which we will definitely be covering. But if you've got any questions, drop them in the comments. But I think everybody seems to be in and sitting comfortably. Hopefully got a nice beverage of their choice. So should we get started?
Okay, brilliant. Thanks, Tommy. I'm happy to kick it off. So the structure now is that I'm going to be having a conversation with Kate for the next 10-15 minutes. I'll be asking her some questions. She'll be feeding back. We're going to keep it at a very basic level for you. So apologies to any very financially orientated people here, but we're going to keep it simple. So hopefully it'll be a level you're comfortable with. So Kate, what I want to ask you, the first question is very straightforward. Can you let me know what's a tax year, and how do I know whether or not I need to do a tax return?
Okay, thanks, Stuart. So this is quite an interesting question, really, because the tax year, as a lot of people will in fact know, runs from the 6th of April to the 5th of April, which is a rather strange date, and you'll soon learn that tax doesn't really make sense often. So why it's 6th of April to 5th of April, we're not really quite sure. But we do often run accounts. You can run accounts to 5th of April, but very often we do run accounts to 31st of March, so 1st of April to 31st of March, because the Inland Revenue, or HMRC as they're now called, do actually accept your accounts running 1st of April to 31st of March, because most people work on month-by-month basis and don't really want to go to a strange date in the middle of the month, 5th of April. So that's the tax year. Whether you need to apply and do a tax return is in fact for you to decide. So it is also known, as you probably know, as self-assessment. So you have to assess your own circumstances. And of course, you're not accountants, but you still have to assess yourself and work out whether you should or shouldn't be registered for tax. So that means, and the main reason for registering for tax these days is if you receive an income which isn't taxed at source. So most of you who are watching tonight, I suspect, are or certainly have been on a PAYE scheme. And as we know, we get a pay slip and it has tax deductions on it. So you won't, in those circumstances, necessarily require a tax return because it's all dealt with for you through your pay slip. However, if you do have other earnings, so some of you might be lucky enough to have buy-to-let properties, for instance, so you may be receiving rental income. Some of you will already have started self-employment as a GP locum. So that therefore means you're being paid gross, no deductions for tax. So you will, in those circumstances, need to do a tax return. And just to let you know, the date you need to register with HMRC for doing a tax return is, again, another strange date, the 5th again, the 5th of October, following the year in which you complete your first tax return. So those of you qualifying, and congratulations for those of you who are coming up, have qualified or are about to qualify. If you start locuming next month, for instance, your first tax year will be the 2021 tax year. That means your tax year will end on the 5th of April, and you will need to register to the Inland Revenue by the 5th of October 2021, which means, and so that's 6 months effectively after the end of the tax year for the tax year that you're having to complete.
Can I ask you, so if you've been working as a registrar trainee GP in a practice and you've only been PAYE, is there any times when you might need to do a tax return for any expenses, or is that going to be taken into account for you?
Right, now that's a good question, Stuart, because a lot of students or GP registrars come to us or when I'm talking on my schemes, the VTS schemes, I often say, has anyone claimed expenses? So as an employee, you can claim some expenses, and certainly as a GP registrar, and even as a hospital doctor, able to claim some expenses which in HMRC terms have to be wholly, this is the phrase you may come across, wholly, exclusively and necessarily for your work. You can claim those, and you can claim them. So we do get some people who are smart enough and claim through the year, and you can just phone up HMRC and say, I need to claim expenses, and they will be taken into account into your notice of code, your tax code, which we may talk about later.
I think we're going to talk about expenses in a later part of this. So if I finish my training and I now move to become a locum, or I'm working somewhere full time, can I choose whether I can be employed or self-employed? It's quite a common situation that, is it my choice, or what's the difference? Can you explain?
So quite often you are given a choice. HMRC would say it isn't a choice. It's actually a matter of fact. But a lot of GP practices will offer you the opportunity of being employed or self-employed. So we are seeing a lot more salaried GPs, and HMRC would probably say that if you're taking a permanent position in a practice, then yes, you should be a salaried GP and employed. So if you're doing 3 days a week or a full time in a practice, you should be employed. However, if you're taking on, let's say, a maternity locum, you could either be employed for the 6 months of maternity, or even up to a year now for a maternity locum, or the practice may say, well, actually, we'll take you on as a locum. And if that's the case, we would always say that being a locum is probably the best position to be in. Although, of course, remember, being in an employed job does give you a little more security. And there are quite big differences between being employed and self-employed. So I don't know,
So are there any benefits to me if I become self-employed that I wouldn't get as unemployed?
Yes. So the reason why we say if you've got the option, we will offer self-employment. The main reason for that would be because you can claim a wider range of expenses. Okay. So as an employee, I mentioned before the wholly exclusively necessarily rule, and unfortunately HMRC's idea of what's necessary isn't necessarily your idea of what might be necessary. So we all know GMC you have to be a member of. BMA, for instance, we know you don't have to be a member of, but actually that is an allowable claim as an employee. But for a locum, the word necessary drops out. So you can just be wholly exclusively. So if you decide you want to spend money on something that is for your job and what you do, whether it be an iPhone or an iPad or being on the internet, you can claim all those sorts of expenses.
I think
as self-employed.
I think one of the important points also that you mentioned was about exclusivity. So a lot of expenses, and we'll come on to expenses, I don't want to spend too long, you may not get tax relief if they're not exclusive. So for example, clothing, you would struggle to claim tax relief on clothing if it was clothing that you could wear in your own time. And we are going to come back to expenses, but I want to move on to probably the hottest topic today, and that's whether you should work as a self-employed person in your own name, or whether you should work as a limited company. So more and more we are coming across so many young doctors who have set themselves up as limited companies because the man in the pub has told them that they're going to save tax. So I don't know what your thoughts are on that.
Yeah, well, it's something, as you know, Stuart, that we don't, as a firm, we don't tend to recommend that people become or work through a limited company. So the first main thing that everyone listening really needs to be aware of is one main thing is you cannot pension any money that you receive through a limited company. So that's the first thing. The second thing is a limited company is what we call a separate legal entity to yourself. So it's almost like being another person. And when you work through your limited company, you actually become an employee of your limited company. And the money that's received by the limited company from the practices that you may work for is actually, in the first instance, the money of the limited company and not your money. So you've got to be quite careful in how you administer your company to ensure that you fulfill all the correct regulations, to ensure that you withdraw money from that company in the correct manner and you pay tax in the correct way and you deliver your accounts at the correct time.
So Kate, given that you'd have your accountant to take care of all of this, would you pay more tax if you were self-employed or more tax if you were a limited company?
Now, this is the biggest question that people ask and people think, is that everyone comes on and says, well, I'm going to set up as a limited company because I pay less tax. Well, that isn't strictly going to be true. So we do have a slide to explain how the tax works so that we can show you how this isn't actually going to be the case. So we can see we've got three options here. So we've got two limited company options, and we've got that versus self-employment. So let's assume, for instance, that we're going to earn, let's assume we've got no employment, we are purely a locum, and let's say we managed to earn, we're working very hard, and we've managed to earn £100,000 of profit. So that's after expenses. So I'm not going to look at expenses in this instance. And so if we look at the self-employed option, we can see we've earned 100,000. We get, and if anyone knows their tax, you get a personal allowance. So by using this slide, we'll go through what tax you're going to pay. We'll talk about when you pay it on another slide. But as to how you calculate it, so we get free pay of £2,500. We then pay on the next £37,500 20%. We then pay on the next £50,000 or up to £50,000. We pay at 40%, a higher rate. Then, of course, we've got national insurance. So national insurance at the moment, just to let you know, as an employee, you're paying what we call class 1 national insurance, which is at 12% and slightly higher than what you would pay as a self-employed individual. So that's one of the benefits of being self-employed, again, against being an employee. Class 2 is a fixed rate. It's currently £3.05 per week, and it's calculated and paid along with your tax. Class 4 is the same, and there are bandings, but it's roughly 9%. So we've done all that calculation. Your net annual income, you can see, is £67,696. Then as a limited company, so if we stopped at the limited company after corporation tax, which, yes, indeed, is a lower rate of tax at 19%, then you might think, oh, well, the limited company is paying £81,000. That's what I'm going to earn. So, of course, that isn't actually what you're going to earn, because that money is still the company's money. So, as I said before, the company has received the money. It's paid its tax at 19%, and it has sitting in its bank account £81,000. But you have to take that money out of the company. And when it comes into your hands, it will come into your hands as a dividend. And as an individual, you have to pay tax on that dividend. So out of the £81,000 that's now left within the company, we can then take off, as we did before, your £12,500 of free pay. Then, as you probably know, you can earn £2,000 of dividends without tax. And then there is additional tax on top of the tax that the company has already paid that you will pay on the extra amounts. And you can see we've done the calculations there to show that there is additional tax that you will pay to effectively, but not quite, take the money up to the various bandings, the 20% and the 40% rate bands. So in fact, by the time you've done that calculation, your net annual income is only that little bit more than what you earned as self-employment. And of course, with a limited company, what we will say to you as accountants, that because of all the regulations surrounding a limited company, we, as accountants, I'm afraid, would charge you a little bit more in accountancy fees because of all the regulations and the special accounts and the filing of accounts, a little bit more for accountancy. So in fact, you could almost end up earning less through a limited company than self-employment. The third option,
one other thing before you move on to the third, which isn't reflected here as well, is also if you have a car and you're running a car through a self-employment,
yes,
you would get tax relief on your car. If you run a car through a limited company, you're going to get a tax charge on the car. So that's another aspect. You could also be worse off as well.
Yes. And the other thing, because you're an employee within your company, you're stuck with this wholly, exclusively, and necessarily. So the word necessarily it is stuck with you again. And if you're claiming for a car, you don't, there are lots of ways of claiming for a car, but if you're claiming mileage, you can only claim on the employment mileage, which is 45p per mile. You can't claim, and we probably won't have time to go into it, but you can't claim for capital allowances, or you might know that as depreciation on your car, which you can do obviously under the self-employment rules. Yes, that was a good point, Stuart. So the third option is a very simple one. We would normally, if we set you up as a limited, for most of our limited companies, we do give you a basic salary. And that's because if it is your only income, what you will want to ensure is that you earn enough money to ensure that you're fulfilling an earning to give you a state pension. So this is quite important because actually dividend income, because you can get dividends from any company, whether it be Boots or Debenhams or anybody else, and there's no sort of state benefit attached to those dividends. It's just a source of investment income. And essentially, your limited company is a source of investment income for you. So in order to ensure that you maintain your state pension, which is well worthwhile, you need to give yourself a minimum level of salary. So that's why we've put a little bit of salary into this company, and then the balance is then paid out to you as dividends. And then we've done the same calculations with the remaining amount after salary. So there, because you've done that, there is a little bit more of an extra saving. But again, it's only very, very marginal. And we would say that there is quite a lot of regulation that's quite difficult surrounding the administration of a limited company. A lot of people we find get themselves mixed up with, have they taken a dividend? Have they taken a loan from the company? Have they taken too much money out of the company and not left enough money in so the company can pay corporation tax? And there's so much around that.
What we haven't taken account here, like you touched on the beginning, the issues with the superannuation, the fact that even if you're a self-employed locum, your GP surgery will pay your superannuation contributions, which as a company they won't, and also the car issues.
Yes.
We wanted to talk about expenses, but I think we covered quite a lot, and I know there's a lot of questions where people are asking specifically. So why don't we go to some questions now specifically about expenses?
Yeah, should we jump into the questions we've had so far? For me, this is a totally key slide because one of the biggest questions we get is, I'm going to start a limited company to save tax. And I think this is a stunning demonstration, as you said, that the accountant will definitely make some more fees from you. But when you run the numbers like this, I'm going to be really selfish and ask my own question first, which is, we talked about limited company, the benefits. We're going to get into IR35 in a minute, which is really hot in the chat. But is there any situation where you would recommend to clients that they work as a limited company, if that's not too vague a question to ask her?
Yeah, I mean, I would say that in the vast majority of the cases, personally, the benefits of a limited company are very, very marginal. And that's even if us as accountants earn more money from it, that's not what we're out to do. We're out to help our clients in the most efficient way. There are some very unusual circumstances that probably don't relate to too many people, apply to people that will apply. So, for example, if you are working full-time as a locum, but you have possibly some other income that you don't need, or you don't need all of your income. Now, most young GPs today, by the time they've paid their mortgages and school fees and their food bills, they don't have a lot left. But if you are lucky enough to have huge amounts of income, then you can roll money up into a company. So you form the company, and our example assumes full distribution of the income, and that's why the tax was paid. Yeah. But if you don't distribute the income and you leave the money in the company, then you only pay 19% tax, and the money is left there. Ultimately, you could wind up the company at a later date, and then you could have a capital distribution, lower tax rate. But it's only something you can do under certain circumstances. We can't really elaborate on that today. But it's quite an unusual circumstance. But in those circumstances, yes, if you have spare money, you don't need it, you want to roll it up. We don't know what the future tax rates are. The tax rates on limited company may double tomorrow. We don't know. It's very unlikely because the government would much rather have 19% from companies than nothing. So we don't think it will change. But that's probably the only case I can think of that you would probably want to have a limited company.
Yeah.
Awesome. I mean, so Aniga is saying, can we get a copy of this super slide? It'll be in the replay, and we can definitely distribute this slide because this is a key slide. But we got some other, we only got 4 slides tonight, but they're all really good. There's so many questions about expenses and a bit about limited company as well. Someone's asking, so you've established that you cannot pension your income if you're working as a limited company, which is a massive disadvantage. Manish is asking, is there any way around that?
Can you register the company as an NHS company?
Sorry, you cannot pension your income when you are working via a limited company, but Manish is asking, is there any way to get around that? Not as far as I'm aware, but I'll definitely bow to your experience on that one.
No.
Yeah.
Not as far as.
Yeah.
You can't make the company an NHS registered organisation.
Yeah.
I
don't think you can.
I think that's quite a complicated thing to do.
Yeah. Yeah,
But
Manish
yes,
is also
in
asking a
general,
question about mortgages. We're not going to cover mortgages today, but if you want to know more about that, Ed will drop a link in to
So
the
just
chat.
on that subject, I can see that Katie has actually talked in the chats, my daughter actually, and she's given some information about whether your limited company can get pensionable status. Probably worth everyone having a look at that. One of the other questions I saw was people asking about claiming their exam fees. I picked that one up. So someone asked, I noticed, can I claim my exam fees against my tax? Okay.
Yes. So this is moving on then onto expenses, which we did explain we would go through. So again, we've got this wholly exclusively, not the necessary, but wholly exclusively rule. Now, the rules with exam fees and courses and things of this nature are relatively complicated. Now, as an employee, because we're looking at exam fees, and quite often we talk about the RCGP exam fees, the strict rule is that in any case, if you are doing a course or exam that adds letters to your name, under normal circumstances, those costs are not allowed to be claimed. Now, there was a case that somebody brought up to HMRC regarding the RCGP exams, and she got it through, and now we are all aware that all your RCGP exams are now claimable. And going back to expenses, if any of you are listening and haven't claimed any expenses at all before, you can go back 4 years. So don't panic too much if you haven't claimed any expenses yet. And quite often when clients come to us, we say, what expenses have you had over the last 4 years? And we will claim them for you. So you haven't missed the boat yet for the last 4 years of medical subscriptions. Maybe as a GP registrar, you were required to have a phone and a car. So there are some expenses that you can still claim.
Okay, can I just pick up on something you just said? So how long have you got to claim the expenses? If you haven't claimed expenses, how long can you go back and claim?
So you can go back 4 tax years. So generally, and that normally covers most people. I think when you first join, your MDU fees are very low. Remember, though, as a GP registrar, your practice tends to reimburse you for those GP, some of your subscriptions. So what you can't claim is anything that you've already had reimbursed from your practice. So it's only those expenses that have been, and the same with any, if they reimburse you for any of your costs. There are 2 ways to do it. You either show that as additional income and then you claim the expense, or you just ignore the expense altogether.
Okay.
Awesome.
Just on a question that was just asked, so which I thought was quite interesting to discuss as well, is can you be both a limited company and be self-employed?
There's nothing to stop you doing that. But we would say that if you were doing that, certainly a limited company earning less than £40,000 to a limited company is really definitely not really worth it because of the rates. Generally, it's not worth setting up. But again, if you wanted to shelter the money, so you could do both.
Okay. So the point that we know is brought up a lot, and I'll throw you in the deep end here, Kate, is IR35, because actually I know it's not actually technically on the list of questions you're expecting to get, but let's talk about IR35. So can you just talk about IR35, explain what it is? What does it apply to? Does it apply to everyone?
Well, so the first thing to understand is that when we talk about IR35, we are actually only talking about limited companies. We're not talking about self-employment. So the rules, admittedly, are very similar between am I self-employed or am I employed, or am I a limited company and do I need to worry about IR35, because the rules are fairly similar. Now, some of you may have come across a problem within government bodies where there is now a rule that if you are running a limited company but the HMRC would decide that you should in fact be an employee, and there is a way of working out. There is a tool on the HMRC website called Assess Tool, which stands for Check Employment Status for Tax. It does mean that if a practice you're working for through a limited company runs this test and decides, and it comes out that you're not exempt from IR35, then it will mean that you will have to be treated almost like an employee, and they will be required by law to deduct tax from you, even though you're working through the limited company. And that starts a whole raft of other problems. Aside from all the other issues of running a limited company, it's another problem you really don't want to come across.
Can I just rewind you a little bit?
Yeah.
Because I'm assuming that some of the people just have, very, very limited knowledge. So what you said, and I agree, is that IR35 only applies to you if you are planning to operate as a limited company. If you're
limited company
or as a locum, you don't have to worry about IR35.
No, there is in fact, as a locum, so the practice you're working for might need to have some concerns, because HMRC, as I say, HMRC, when we look at employment and self-employment, it's not a choice. It's actually a matter of fact, and there are certain facts which cover self-employment and the IR35 rules, which we would look at, or HMRC would look at, to decide whether, in their opinion, you should be treated as an employee, or whether you're allowed to be treated as self-employed and are in fact a legitimate business and you're running as such. So some of that, just to run through some of those things, the number one item on that list is actually something called substitution, which we know as GP locums is very difficult, but it is one of the things that HMRC will look at. And that is, if you were to have agreed to do a session for a practice, if you were sick that day, would you be able to substitute a colleague of yours or somebody? You would still invoice the business, but you wouldn't do the job yourself. You would send your friend, who's also a qualified GP, to take your place because you were sick. Now, we know that very rarely happens, but if it were to happen, that would be one rule that would tell the Inland Revenue that, yes, you are definitely working as a self-employed individual. But we have to sort of run over that a bit. We have to be careful with that one because we know it doesn't very often happen. So the other things that HMRC would look at, so if you were self-employment, what is quite a good thing to have is a contract of services. So that is, you're offering your services to a surgery, as opposed to an employee who would have a contract of service, which is their employment contract. So that's a distinction between employment and self-employment. And then we've got, as a self-employed individual, you should be being able to do your work by yourself and run your work purely without any control. So control or management of any sort would also indicate either self-employment, or if we're looking at a limited company, it would also indicate IR35. Two other, and
can I just say, can I just go back to the basics on IR35? So what does it mean, IR35? What is it? What is IR35? To keep it simple.
Well, it's special regulations that will prevent people from having a company in order, if you like, to save tax. Although we've just worked out that you can't really save tax, but when you should really be treated as an employee.
So what this is, IR35 is effectively it's where you get a one-man band company. Yeah, so you've got a company which is one person, and they are working in one place effectively. Then they under IR35, if they can't provide a substitute, if they can't prove that they're working independently, offering their contract services, then they're going to be treated as an employee, even though their limited company gets treated as an employee. That's effectively what we're saying. Yes. I think.
It is. So you will come across the term working within IR35 and outside IR35. And in fact, it is one of the self-employment, self-assessment things where there is actually now a box on your tax return that says, are you receiving dividends from a company that is inside or outside IR35? And you actually have to tick that box and say whether you feel you're working inside or outside those rules.
I think we need to move on to some other points. We've got to.
Yes.
You touched in the very beginning on this Inland Revenue website. So what we will make sure is in the notes we will provide everyone who's been part of this with the link. And if you go onto that link and you tick all the boxes, the Inland Revenue guarantee to stand by the result test.
Awesome.
They do.
It's worth doing that.
As you say, Stuart, maybe we should move on because we're getting in. I mean, R35, we could talk about a whole webinar. Maybe we should do a whole webinar
in itself.
Yeah, if you're watching the replay, unfortunately, you don't get the chat because what's going on in the chat is not only do we have Ed from Medics Money, who's an accountant answering questions, we also have Stuart's daughter, Katie, who's also an accountant as well, who are answering the questions. So they're doing sterling work there. So keep an eye on the chat. We have got, so we're going to finish on IR35 and we'll try and pick up some of the questions that are in the chat later, but we've got to move on to keep the pace up. We did get a pre-submitted question, which kind of the one that we talked about earlier, Kate. Do you want to? So this is from Dr. L. I think she wants to stay anonymous, but anyway, I'm wondering about the best way to manage my income. I've recently CCT'd and I have a salaried GP job and I also work regularly and out of hours. They take off the tax and national insurance and the pension automatically. However, I'm heavily taxed on my out of hours income, so much so that I only received 38% of my pay last month. And I noticed that they also forgot to take off the student loan. So I'll probably have a bill coming for that my way. Dr. L is on, she's paying attention. I like this. I noticed that my tax code is DO or D0. I earn about $2,700 a month before deductions from salaried and about $4,000 a month from the out of hours. I've not done any locums as I'm kept busy enough for my current work. So basically, she's also a mature student like me and Ed, so has loads of debt. I've been there. I came out with 85 grand of debt. I am now debt free except for mortgages. So keep going, Dr. L. I feel your pain. But a basic question is, basically, why is she getting so heavily taxed on the out of hours income? And yeah, what's going on with those deductions?
Okay. So it is perfectly reasonable. So it sounds like she's not self-employed, this lady. She is just employed, but has two separate employments. Now, normally your first employment, so I suspect her salary GP post is her first employment or was her first employment. And that therefore received her main notice of coding. So when we look at a notice of coding, when you take on a job, they automatically give you the free pay relating to your first job. I suspect she set that up first. So she got a notice of coding giving her free pay, the £12,500. And it will also be using the first level of tax at the 20%. The D0 code, it is actually, we call it DO, but it is actually D0, is indicating that her second job, because it is a second job, and they know she's got coding on the first job, that is actually being taxed at a higher rate of 40%. So everything she's earning in that job is being taxed at 40%. She will also be paying some element of national insurance. She will also be paying a pension on that post. So I'm not surprised that her remaining income is only about 38%. So the pension's a good thing to have. But actually looking at the numbers, did you say 2,700 for the first job? When we add that up, it isn't actually reaching the limit for the 20% band. So she's actually missing out on some free tax. So at the end of the day, it will all get sorted out. So if she does nothing, the Inland Revenue will, at some point in time, probably in 2 years' time, do a calculation and work out that she's overpaid her tax. Because So one thing she could do, and it is something that people don't really realize, but they are able to do, she could swap the codes over. So she could have the personal allowance and the 20% ban taken off the out of hours job and the DO code on the other job. So that would still mean she's paying most of her tax as she goes along, which is quite good for cash flow purposes. But it would mean that she is utilising all her 20% band, and she won't at the end of the day end up in a refund position. So I'm fairly certain that if she were to do a tax calculation now, she would be in a refund position. Having said that, it would be perhaps a wise thing to do to register and do a tax return in these circumstances, because then she will get the tax refund probably more quickly. And also by doing a tax return, she can claim any relevant expenses at the same time.
Awesome. Great. I mean, yeah, that's a very comprehensive answer. So Dr. L, who's a mature student with a load of debt like me and Ed were, hope that helps you, because yeah, you need some help there. Okay, great. Are we going to move on now to?
Yeah, there's one or two important questions. One of them should be pretty quick. But what I want to talk about is the NHS pension scheme. We touched on that. So a lot of people often ask me when they first come into the NHS, you know, how does the scheme work? How do I contribute? What are the contribution rates? And that's really important, because there's been a lot of changes in that. And we know our last webinar was on that single topic alone. So if you cover that in 5 minutes, you're doing pretty well.
Okay. Well, if I cover it from people who are becoming GP locums, which is probably the easiest way to look at it. So as everyone's probably aware anyway, there are tier rates. So depending on how much you're earning, you will pay at different rates. So what you need to be aware of, however, is, sorry, I've just lost my train of thought there. Completely gone.
You're talking about the tier rates for superannuation contributions.
Yes, I was going to go on and talk about, GP locums. So how you pay those, pay into the pension as a GP locum. So the first thing you need to be aware of, the first thing you need to be aware of about the pension scheme is that it's all or nothing. So if you're working in the NHS, the rules you sign up to by being in the NHS pension scheme are that every job that you do that's an NHS job, and there's one exception to this, you have to pension, or you should be pensioning all that money. It in theory isn't a choice, but we'll explain why you can accidentally not do that. But in theory, that's what you're signing up to do. So as a GP locum, every month you are best to pension that money, and you go onto the website, and we can give you the information to do that, the NHS website, and you download 2 forms, a locum A form and a locum B form. One is a page that you give each and individual surgery that you work for. The other form is the summary of your monthly earnings, because you every month need to pay your contributions over to the NHS pensions. Having said that, if you forget, you actually only have a 10-week window in order to do that. So if you get caught behind, or you didn't realize you had to do that, you can actually end up getting your locum income excluded from the pension, because if you miss that 10-week window, you're not in a position to pension that money. So that's one of the issues we've got.
Can you talk about the amount people would have to pay into their pensions?
Yeah. So as a GP locum, when you bill, so let's say you're going to bill, let's just say, for example, £100, the practice will pay. So there are 2 elements to your pension. There's the element that's tier rated for you. So most of you probably will pay at either 12.5% or 13% on your own earnings. And that would be so equivalent to if you were earning as an employee. And then there's this extra element that gets paid into your pension. That's the employer's element. And that contribution is a fixed amount of 14.38%. And that is calculated on 90% of the bill you raise. So what we recommend is that you raise an invoice for your £100, and then you calculate on behalf of the practice the 14.38% of 90%, so £90 is effectively, and add that onto your bill to ensure that you get it paid. Now, the one thing you do need to be aware of is that if you miss your 10-week window and don't manage to pay that extra 14% over to your pension, you should really return that to the practice if it doesn't end up in your pension. So that's something to be aware of that you do need to watch.
This is complicated stuff. How are all these new locums going to know about this? How do they find out?
Well, funnily enough, Stuart, most of them, or you won't be surprised, most of them don't, because what we're having a big issue with at the moment, as you're well aware, is that we've got a lot of locums who no, that's not locums. So locums who don't know that they need to do this in order to get their pension. But the other issue we've got with pensions is salaried GPs who aren't aware of the fact that although their pension is being deducted and taken from their pay, don't realise that in order to ensure that it gets to their own personal pension, they have to complete what we call a Type 2 superannuation certificate. And what's happened is, for some reason during your courses and things, we know you're not told about accounts, but you're not told about your pension either. That you do need to be aware that if you're in a salaried post, you need to complete this certificate every year. As you may be aware, GP partners also have to complete it, in theory or ideally by the end of February each year, to prove what your earnings were as a salaried GP, because that gets sent off and that goes to NHS pensions to ensure that you get that money put towards your pension.
And just without a complete shameless promotion here, it's very, very important that this information is correct. And if your accountant doesn't know what they're doing, and I'm not saying that any of them do, but if you're not a medical specialist, you may not know, and your certificate is wrong, what's the implications of that?
Well, the certificate you need to know is right, because it directly impacts on what pension you will receive at the end of the day. And what we are telling all our clients, so it used to really be the partners, but now it's every single client or anyone who is in the NHS pension scheme, it's really important now to try and get what we call your total reward statement. So I don't want to go too much into depth with superannuation because it's a whole different thing. But just to make people aware who are listening at the moment, if you go on and to the NHS Pensions website and try and download your total reward statement, that will give you an indication of what pension you might receive, let's say if you were to retire tomorrow. But also you can get request a documentation that lists all your both your GP jobs if you're a GP, but going back, you have to request it separately if you want to go back into your hospital jobs. But it's worth doing that to ensure that you have a figure down for every year you've been in the pension scheme, just to ensure that you have got all that information put onto your pension calculation. I'm not going to go into how pensions are calculated because unfortunately it's not straightforward. It's not what you put in.
We've done that.
All to do with your earnings.
I'm going to just, because we're almost done, we probably want a couple of questions. I'm going to ask you one more question for 1 minute, because the final question I want to ask you. What about what's the deadline for my tax return, and what if I forget to do it? What's the implication?
Oh yes, we missed covering that. Yes. So what you need to know about paying tax,
Okay.
you pay it twice a year. So we've got a slide here that shows, let's say that you did your tax return. Oh, I think it's the old slide. We haven't updated. Never mind. So let's say that somebody did a tax return for the year ended 5th of April, 2019. They earned £30,000. Now,
Well, they pay,
if
they 30,000.
The tax calculation is 30. Yes, sorry, the tax liability. So having earned a lot more, the tax is calculated as being £30 when you have to pay it. So if nothing else, one of the things that people must take away from this presentation is, one, don't leave your tax return to the last minute, because there will be penalties, and I'll just come on to that shortly after I've been through this slide. And two, please do put money aside every month to save up for your tax. We recommend generally, if you're being paid gross as a locum, 30% of that gross amount you really must be putting aside every month from day one. And what you need to understand is that you won't be paying tax until you've been working for about a year and a half. So if you were to start earning this August, the first tax bill you will pay will not be until January 2022. Not next January, but the year after. So it's really important. And when you get that tax bill, it will be extremely high. And this slide explains why. So the tax liability.
Over the years, it was always, I'm told I don't pay tax in my first year. Well, yes, you don't pay tax in your first year, but you pay 18 months tax after 18 months. And I think that's always been the question that we've had for years and years, isn't it?
That's right. So this slide shows you. So we've got a tax liability for 30,000 in the first year. So that's calculated as at the end of April 19. It's payable the following January. And then there's something called a payment on account. So there's essentially 3 payment times. So you pay tax twice a year, January and July. You may all well be aware of that. But in that first year, you pay all the tax for your first year, plus a payment on account that's based on the previous year's tax. So people think they pay it in advance, but actually you're almost already at the end of your second year when you have to pay that first contribution. So the first tax bill isn't just for the 30 for your first tax year, it's for the 30 plus 50% of the 30, because you have to make a contribution to the following year as well. So you can see the first tax bill in this case is not 30,000, it's £45,000. Then you have a second instalment towards the next tax year of 15. And then if we're to roll forward and you earn more in your second year, then as we can see here, you've made payments 1, 15,000, payment 2, 15,000. You've done your tax return for the following year, and it's not 30 this year, it's 40. So an extra £10,000 tax you've got to pay. So you've paid 30, so you pay another 10. So we normally say it's three amounts: 2 payments on account based on your earnings for the previous year, and then a third payment to catch you up for.
And of course, Kate, because your tax liability was higher than anticipated, the payment on account is higher. So you go from a tax in January 2020 of 45,000. You had 15,000 payment on account, so suddenly 20,000 payment on account in the next year. And this is why people suddenly get these huge tax bills they're not expecting if they haven't put aside money every month.
And when income evens out, of course, it all evens out. And with any luck, if you're earning a level, once you've gone through these first couple of years, you do hope that your January and July payment become roughly equal. One thing to point out before anyone asks the question is, what if your income goes down? So if your income goes down, because you pay already, you're into 10 months actually into the next year. And if in that next year, your income is a lot less than the first year that you had, you can opt to pay less on the payment on account. So the payment on account is initially based on your previous year's earnings. But if you know the next year's earnings is going to be lower than that first, you can choose to reduce the payment on account.
That's something your accountant would do for you.
Exactly, yes. So very often we'll ask clients.
Conscious of the time,
one
final question, and I think this slide, everyone will have this slide so they can have a look at it in their own time, and you can always ask us or your accountant about this and explain it because we've gone through it very quickly. What about my tax return? So we know the tax return deadline is the following 31st of January.
Yeah.
If I didn't do my tax return and I needed to, what would happen to me?
Okay. Now this actually, the rules on this have changed fairly recently, and I've even got friends of mine who've actually been caught by this. So if you miss the deadline for submitting a tax return, or you miss 31st of January deadline, which is when you have to submit your tax return. So that's for the previous April, you have to submit it by 31st of January the following year. That year, you get an automatic £100 penalty. So that sounds, so you think, well, that might not be too bad. What you must be aware of now, they've really upped the penalties on this. So if you don't submit that tax return for 3 months, you then start getting into a charge of £10 per day. And that in the end can end up, if you submit a tax return a whole year late, you can end up with a penalty of £1,600. So it is really, really important that you look at what your earnings are, that you decide whether you should or shouldn't do a tax return, and please make sure that you do your tax return by the due date.
Or make sure or make sure you find an accountant.
Or make sure you find an accountant.
There's a few £100 paid to your accountant.
Yes.
I think we're pretty much out of time. I know Tommy wants to come back. I mean, we wanted to do some questions at the end, but fortunately my daughter, who's more knowledgeable than me, has answered everyone's questions for them. It's been fantastic. So I think we've probably done as much as we can do. I don't know what you say, Tommy, to that.
Yeah, I've learned so much just by reading the chat, and unfortunately, if you're watching the replay, you don't get the chat, but we've covered most of it in here. But yeah, Katie and Ed are doing sterling work in the chat. There's a couple of people. I mean, if you're asking more about pensions, we did a webinar about a month ago now, which is on our YouTube channel. It basically broke the internet. There was 955 doctors there. We got in really deep on pensions, so definitely have a look at that. A couple of people are asking about annualization and how to avoid it as a locum. That's pretty technical. I don't know if we want to go there today.
It's quite a technical. I don't think that's something we can.
Yeah. Okay. Kat, when Kat logs into a total reward statement, it says they got no information, right? So welcome to my world, and welcome to almost every other GP's world. That is a
That's
massive,
always the result.
Massive issue. So if you're a trainee, GPSD3, get your total reward statement right now, because this could be the last time it's accurate, and I'm not even joking. If it's not, if like Kat, you log in, there's nothing there, you got to contact NHS Pensions, and that is a whole
direct line number, and phone them up. They're pretty good, and they will tell you what their problem is if you can't log in. And it may be that if you're a salaried GP and you haven't done your type 2 certificate, that they're waiting for those certificates to come in. They do an update. They're supposed to do it once a year. It should be every year in August. They did do an extra one last year in December. The next update is August. So if you try again after August and you're still coming up with a blank, phone up NHS Pensions and see if they can help you. And they'll probably say, we've got up to this year, we haven't got any further information. Because unfortunately, if information doesn't come through and they do an update, anything previous to that was on the website gets wiped out. So they will only do an update, and you'll only get figures if your information is up to date to the last certificate. So that's probably where the issue lies, that they haven't got all your up-to-date information.
Awesome. We still got a few questions coming through on the chat, and if I've missed anyone's question and it hasn't been answered, can you bump it up to the top of the chat so I can see it? Because there's just been an unbelievable amount of action in the chat today. I mean, I think the thing for me is the reason me and Ed set up Medics Money was twofold. One, to give you guys information like this that we don't get when we're being trained. So good quality financial information from experts. But two, we started Medics Money so you could find a good specialist medical accountant. And it's really, really hard to find a good specialist medical accountant because as you've seen today, it's a very specialized area. So, you know, Stuart, if I'm using a non-specialist or doing it myself, why should I use an accountant and why would I consider using a specialist like yourself?
Well, I think it's, first of all, using an accountant, it's like anything, you know, you can fix your own washing machine, you can do your own house conveyancing, but do you really want to do that? You know, you really need to spend a lot of time researching and having all the information. We do this every day of our lives. I've been doing it every day of my life for over 30 years, talking to GPs. So I see exactly what goes on. I see the trends, I see changes, and we have all the information. We talk to people. So first of all, we have everything at our fingertips. And every single employee at RBP is a medical specialist. We are not a firm of medical specialists where we specialize in lots of different things. We only specialize in medical accounts. So that's the first thing. And that's the big advantage of us. Why would you use us? And I think we've covered it a little bit. So there's a lot of specialist stuff. There's a lot of, particularly surrounding superannuation, your pension, surrounding, you know, whether you should be employed or self-employed, all the things we've covered. And you know, we're not very, you know, relatively, I believe we're not expensive for what we do, given the amount of knowledge we have. We only employ qualified people. We only have people that specialize in what they're doing. So I think, you know, I really do believe that we are, you know, the best place for you to come and talk to. That's really the reason I would say, yeah.
Yeah, I think, you know, as I said, me and Ed believe that in specialist medical accounting advice or independent financial advice for financial advice so passionately. And we saw so many non-specialists that giving out incorrect advice that we set up Medics Money. So it's a specialist area. And, you know, when you're a GP SD3, do you need an accountant? Probably not. If you're on it, you can get your total award statement, claim back all your tax and be on it like that. But as you start to transition from ST3 into the big wide world, you've got so much going on anyway. I remember it well. That if you can just, if you're a locum, you're running a business, you're promoting yourself, you're handling all your payroll, and then you just need to make it as easy as possible for yourself by getting an accountant. So you're kind of, if you're ST3 moving into the big wide world, you're transitioning from a quite protected PAYE environment where most things are being done for you. And now you're in the big wide world. And if you don't look after your finances, you are going to get caught out. So if you take home, Jitin Verma has done a great summary of this evening's webinar. He just says, or she, in summary, exams are claimable, get your total award statement and know your tax liability. I think that's a pretty good place to wrap up. Stuart, you look like you were going to say something.
I was going to say something and then it's just gone out of my mind. If I remember, I'll come back to you.
There's still questions coming through on the chat, and Katie is doing sterling work there, and as is Ed. Let me just have a quick last minute scan.
I'm sorry, there was one thing I did want to say to you, which was really important. We as a firm offer a service to registrars where if they're looking to join a GP partnership, we will help them. We'll review the accounts, we'll advise them whether we think from a financial perspective it's a good surgery to join. And that's a free service, I believe. Do we offer it free, Kate? Do we still, or do we charge for it?
Sorry.
Looks like you're offering it free to viewers of this webinar, right?
I think we offer it free to anyone who wants to join a surgery. We will review the accounts.
We've actually, we were going to charge, yeah, there is an initial fee because it does take a couple of hours to analyse a set of accounts.
Well,
so,
like Tommy says, this webinar, I will personally do it for you. On this.
We were going to talk a bit about career stuff today. We were going to talk a bit about career stuff, but we've literally run out of time on that. So if anybody wants to know about that, maybe we should do another webinar on that, or maybe drop us an email. So yeah, I think we should wrap it up there if that's okay. My kids will be up they get up when the sun comes up at the moment, which is really annoying. But in the winter,
It's 4 o'clock.
Yeah, I know. But in the winter, right, they don't play fair. They still get up at like 5:30 in the winter. So, yeah, let me just have one last scan of the chat. It's really active in the chat, so I'm slightly reluctant to shut it down. Are you guys okay for another 5 minutes or something?
I'm fine.
I'm comfortable, yeah.
Yeah. Okay, great. Some people are asking questions that are for a financial advisor, basically about what's the best way to manage your NHS pension. We've got the webinar, which we did with Steve, and so have a look at that one because we went in deep there, and I don't think we can do that today.
Steve is an IFA, so
So I think that's quite an important distinction that a lot of people don't realize is that accountants do sort of the tax side of things, but mortgages, specific pension advice, as in should I come in and out of the scheme, or income protection, and all of that is the realm of financial advice. And the reason doctors don't know that is because no one teaches us, but Medics Money is here for you to teach that. As you say, Katie and Ed have been doing sterling work. So I think we should wrap it up if that's okay, guys. Thank you so much for everyone that came and made the chat so interactive. There's been so much information in the chat. It's hard to keep up, but Katie and Ed are doing great work. Thank you, Stuart and Katie here for your time this evening and all the extra work that we do in the background putting this together, which you guys don't see, but it helps it to run smoothly, which it did, which is great. I think we should definitely do another one real soon. But for now, I think we should say good night to everyone and thanks for coming.
All right, thank you.
All right, good night.